move beyond the developed fintech ecosystems, I think clearly the most number of diversified fintech platforms with a promise to impact a large target segment is being led by India today. We as Quona invest across in Asia, Africa, Latin America, all continents, but clearly India has been the most thriving portfolio ecosystem for us. In terms of the newer areas where we are starting to see more traction in recent years, clearly moving beyond payments and lending, we are starting to see more relevant insurance as a service models and more creative insurtech models. Also starting to see a lot more action in the digital banking and personal finance management space, or rather I should say wealth management and financial advisory space. If you look at what we as Quona look for in entrepreneurs or startup opportunities, I think the most fundamental is really being excited about the market opportunity. And when I say market opportunity, there are a number of opportunities we come across which, on the face of it, might look exciting enough, but the real, target segments and the addressable market size usually do not match up to the ambitions of the entrepreneurs. So that's one. The second clearly is the quality of entrepreneurs. Again, a fairly conventional statement, but what it means for us is entrepreneurs who understand financial services and who understand and can be an effective bridge to leveraging technology to build next generation financial services companies, and those who respect regulations and respect the laws of the land, to be within the laws, to be able to change the system. And I think that's a very fine balance. It's not about entrepreneurs who are necessarily revolutionary, but it's more about entrepreneurs who are transformative and who take what exists today and who can build something new out of it. And the third is clearly the business model that has been put in place. We have seen multiple companies in the same segment with very different business models and hence very different sustainability or profitability metrics. So those are probably the three key important factors for us. So time horizon, there is a rule of thumb, but generally the time horizon ends up being quite varied because different sectors require different level of patient capital. But in summary, we as an early stage investor or an investor coming in at Series A or B, bring in a lot of patient capital. We typically invest in companies for at least 5 to 7 years, if not more, because it takes that much time to be able to build something new and innovative and change the system. So we are fairly patient in that sense, and returns are typically what most of the commercial funds expect in terms of high 20s in terms of IRRs. The role of a regulator has got a lot more complicated today. So they are trying to balance a lot of different and sometimes competing dynamics, including delivering financial services to the underserved or unserved, fostering new technologies and innovation, while respecting existing large enterprises like banks and financial institutions, and while doing all this, ensuring that the system doesn't collapse. So it's complicated. I think the regulator in India has probably played one of the best balancing acts in terms of making all this happen. One could fault the regulator sometimes for being a little too conservative, but compared to some of the other markets, like if you go to China, for example, companies get to a certain scale before the regulator decides to step in. Whereas in India, usually we are a little bit more proactive on that front. Sometimes that's good, sometimes not. I think we can certainly refine the balance.